In this video, I am going to discuss about costs. The term costs refers to the expenses incurred in producing goods or providing services. It can include various types of expenses such as labor, raw materials, overhead and etc. The costs are used to determine the price at which goods or services are sold and to determine the profit or loss of a business. Costs can be mainly divided into fixed cost and variable costs. Let's talk about the fixed cost first. Fixed costs are expenses that do not change with an increase or decrease in the amount of goods or services produced. They remain constant regardless of the level of production. For examples, rent for a factory or office space, salaries for full-time employees. This is the fixed cost curve. Even though this is a straight line, we can also call this as a fixed cost curve. X-axis depicts the quantity or the output. Y-axis depicts the cost. Look at the curve. Even though the quantity is increasing, the cost is constant. That is the main characteristic of the fixed costs. Let's say you are renting an office space for your business. Even though you are not producing any goods or services within a month, you have to pay the rent. Now let's talk about the variable costs. Variable costs are expenses that vary in proportion to the level of production or the amount of goods or services produced. They change based on the volume of production and are typically directly tied to the production processes. For examples, raw materials and supplies, labor costs for hourly workers, fuel and energy costs for production machinery. This is the curve for the variable cost. It starts from the zero. As the quantity increases, the cost will also increase. As the output decreases, the cost will also decrease. Total cost. Total cost refers to the sum of all costs incurred in producing and selling a product or providing a service. It can be calculated by adding up both fixed cost and variable costs. This is the equation for total cost. Total cost equals to fixed cost plus variable cost per unit multiplied by quantity of production. Here is an example. For a month, let's say fixed cost is 2000 and the variable cost per unit is $2. 100 units produced. What will be the total cost? Total cost will be the fixed cost 2000 plus the unit cost multiplied by the unit produced. Total cost will be $4,000. Here you can see fixed cost curve, variable cost curve and total cost curve. Let's talk about the total cost curve. It starts at the fixed cost amount 2000. Then it will increase as the production goes up. And also important thing to note is that the total cost curve will parallel to the variable cost curve. These two lines are parallel to each other. For the previous example, we can now calculate the total cost. So this is the total cost curve and we know the units produced, 1000 units. So we can simply draw a line that will cut the total cost curve here and we can draw a line parallel to the x-axis that will give us the total cost, which is 4000. If we want to find the cost for 2000 units, we can simply repeat the process. Draw a line here and it will cut the total cost curve that will give the total cost. In this case, it will be 6000. Now let's talk about the marginal cost. Marginal cost is the cost of producing one additional unit of a good or service. It is calculated by taking the change in total cost that results from producing one additional unit of output. In other words, marginal cost is the difference in total cost between the current level of production and the next unit of production. It is an incremental cost, meaning that it only considers the cost of producing one additional unit rather than the total cost of production. Here is we can calculate the marginal cost. We can take the total cost and we can calculate the slope of this curve. Marginal cost is the additional cost which occurs when producing one extra unit. So here this space is for one extra unit and the height of this line will represent the marginal cost. When it comes to calculations, we can simply calculate the slope of this curve and it will give us the marginal cost. Here we can find the marginal cost as we go up. Here the total cost curve will be intersect. Now we can go parallel to the x-axis. It is between 4000 and 6000. It will be 5000. What we can do here is, this is 5000 and we can calculate, and remember this starts from 2000. So 5000 minus 2000 divided by 6 minus 0. 5000 is here. We are taking this height and we are taking this distance. So this height represent 5000 minus 2000 and this length represents by 6 minus 0 here. So the slope will be 3000 divided by 6 will be 500, which means in order to produce one extra unit, the business has to incur $500. This includes portion of fixed cost as well as variable cost. Thank you for watching. See you in the next video.